Mexico private spending, QOQ, increased to 0.4% in 1Q from previous 1.4%.
Mexico private spending, year over year, down to 0.6% in 1Q from previous 0.4%.
Euro shot US dollar rebound, loses momentum with markets bracing for the Fed's decision. WTI oil price holds gains near $0.07, boosted by rising geopolitical risks. Forex Live European FX News Wrap, dollar lightly lower as risk remains cautious.
US dollar INR holds near 2-month high amid Middle East tensions and Fed caution.
Citi sees oil prices supported by risk premium capped by 2026 oversupply. Yen is a relative outperformer on trade data surprise. Scotiabank.
UK says expect tariffs agreement with US on autos to come into force by end of the month. Pound outperforming most G10 currencies. Scotiabank.
Morning. Just eating breakfast. Well, lunch actually. Crypto today. Bitcoin, Ethereum, XRP weather geopolitical tensions, risk off sentiment ahead of Fed rate decision. The US dollar is mostly lower ahead of the Fed interest rate decision.
Oil prices steady with focus on Israel-Iran war, U.S. inventories, and Fed decision.
All right, we'll start in a minute. Crypto today. Bitcoin, Ethereum, XRP weather geopolitical tensions, risk off sentiment ahead of Fed rate decision. The US dollar is mostly lower ahead of the Fed interest rate decision.
Oil prices steady with focus on Israel-Iran war, U.S. inventories, and Fed decision.
Mexico private spending, QOQ, increased to 0.4% in 1Q from previous 1.4%.
Mexico private spending, year over year, down to 0.6% in 1Q from previous 0.4%.
Euro, short US dollar rebound, loses momentum with markets bracing for the Fed's decision. WTI oil price holds gains near 7/10 $, boosted by rising geopolitical risks. Forex Live European FX News Wrap, dollar lightly lower as risk remains cautious.
US dollar INR holds near 2-month high amid Middle East tensions and Fed caution.
Citi sees oil prices supported by risk premium, capped by 2026 oversupply.
All right. Good morning. Welcome to Forex.Today, the YouTube community of more than 21,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis on things like gold, oil, Bitcoin, euro, dollar, so on and so forth. Without further ado, let's get on with it. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never, ever, 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 ever risk money you cannot afford to lose. Okay, so you might have heard while we were waiting for the live stream to begin, I was running the squawk box in the background. So as the news came in, you got it. So now you don't even have to take your eyes off the charts and you can always be informed. Yeah, pretty cool. So let's start with a little macro. Macro, going to do the macro. Okay, are you ready for this? Boom. Hang on. Boom! There we go. Yeah. So as you can, we will be using traders.com and tradersway.com. If you're not familiar with TRADARS, we automate your market sentiment analysis, your fundamental analysis, your technical analysis. We provide hours and hours of performance coaching every day, and we narrow your spread. Well, to be more precise, we give you a cash rebate on your trading spread. Yeah, at the end of every day, you get some of your money back. Noise! I laugh because you're like, who does that? Yeah. Cool. So anyways, my name is Wayne. I love trading. Been doing it a long time. I'm a money guy. I'm a capitalist pig dog. Capitalism good, socialism bad. That's where I stand. Cool. And here's our rebate program. Now you have to be a member, of course, but it's free to sign up. And what happens is we give you some of your trading spread back as a cash, not credit, cash injection back into your trading account. Cool. You're welcome. It's kind of like a 2% cash back credit card, but it's more than 2%. Nice. All right, so we're kind of neutral right now, and we're waiting for news to come out. Weekly claims are coming out. You're like, no, Wayne, that's tomorrow. No, it's not. Yes, it is. No, it's not. Wayne, it always comes out on Thursday. I know. But it's coming out today, Wednesday. Yeah, that's because tomorrow the markets are closed, yo. Did you know that? If you didn't know that, you were making a grave mistake. Well, maybe not grave, but yeah, tomorrow banks are not going to be open in the United States of America. Does that impact Forex? Because you're like, dude, well, Forex is open, 24 hours a day during the business week. Yeah, but if banks are closed, where's the money come from? So yeah, if the banks are closed, banks are closed. So be careful. In a way that it does directly impact the volume and volatility of the markets when you cut out the largest economy and reserve currency of the entire world. Yeah. Quick update: money going into treasuries. Oil stabilizing around 75 while we wait for our geopolitical risk to ebb or flow. Gold kind of meh. S&P 500. Hey, can we get back above 6K or are we on our way down to 5K? Well, that's what I talked about yesterday. Okay. Dollar flat right now, and Bitcoin showing some risk off. Generally speaking, not a lot has changed on our bullish hit list or our bearish hit list. But you can see we're consolidating and moving sideways, or at least not up, sideways to down. In the global stock market. Yeah. Take a deeper dive. I'm just going to quickly look at that. Yeah, scatter plot. Okay, dollar pairs only. Yeah. Dollar week, dollar week, dollar week, dollar week. Swiss franc even weaker. Dollar week, dollar week. Cool. Of course, we can go through all these like stock indices and commodities and stuff like that. I'm just burning through this because I've already done all that. So that's okay. That's good. All right. Yeah, look at that. That's quite informative. Mm-hmm. So Bank of Japan earlier in the week left interest rates the same. Retail sales very disappointing yesterday. Today, CPI is high in the UK, not as high as it was, but high relative to its peers for sure. And today, not at 6:30, not at 7:30, but at 8:30, we have our claims. And Fed funds rate, not at 12, but at 2. It's a little glitchy there. Okay. And then later today, we have Kiwi GDP and then Aussie jobs. So just tack on 2 hours to each of those. Okay. Tomorrow, Swiss National Bank makes an interest rate decision. Then the Bank of England makes an interest rate decision. Holy smokes. But remember, tomorrow the markets are closed in the United States. And Friday is probably going to be thin unless we are prepping or in war. So there's our macro update. Let's get on with it technically. So tell me what you think about euro dollar. You have any thoughts on it for today? Okay, let's take a look. I want to double check that we are only looking for patterns that we care about. And these are reversal patterns. These are trend patterns. Those are the ones I like. All right. Even this, lots of Gartleys and looks like three-wave corrections. Okay, so for example, a trade like this looks like, okay, a series of, right, higher low, higher high. But on the high, right, on a higher time frame, it's just a pullback. So on the higher time frame, it looks like that. So this is probably what the pattern will produce. That's all it says. It says that this might be forming, not that it's already formed. Okay? And by the way, we have that data too. We have the data, things that are already formed. But this is looking into the future. It's okay. And says if we go from C to D, then be prepared for more of a move this way, despite the higher low, higher high on this time frame. On a higher time frame, it's just down. And it's saying the same plausibility on the hour, so it's pretty much the same thing. So it's thinking the simple pullback is probably on a 4-hour or a daily. So that's where you kind of look for the 4-hour moving averages, daily moving averages, pivot points, etc., etc. This is just essentially a Fibonacci retracement. If you think about that on a higher time frame, down, up 50% down. How would that play out price action wise on a smaller time frame? Yeah. Like that. All right. So that's that. Anything else going on our euro dollar? Well, downward pressure. Downward pressure. Okay, bearish with opportunities. And then daily, it was up, but we might have a breach. So this is a longer term play now. If it makes a low to the box, look for a lower high, and then you can be short for a month. Or however long it takes to fulfill this pattern, which would then be, well, at least down to 109, but probably even lower, but we couldn't confirm that now. So maybe it's only 2 weeks or 3 weeks. But for those that only pick up 25 pips on a trade, being short euro dollar for a month sounds unbelievable. Well, believe it, baby. It can happen, but not if you don't try. Looking at the 4-hour, same as the daily. If we make a breach lower to 113.5, then you probably want to look for a retracement back to 115, and then you drop it like it's hot. Silly Sally walks to town. No, Silly Sally goes to town walking backwards upside down. Silly Alexio. Yeah. Silly Alexio. Yeah. So anyways, now notice that we have a 15-minute chart, a 30-minute chart, a 60-minute chart, a 4-hour chart, and a daily chart. There's patterns on all of these things. Okay. What's the sum total? Maybe not now, but down. Maybe not now, but down. Maybe not now, but down, because they're reversal patterns. So short-term up with long-term down. And then down, 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 and down. So, should you buy it? Well, you do you. You do you. Wayne, I don't know what it means. Well, if you look at in the description below the video, there's a download link to get all the pattern the pattern cheat sheet so that you know what all this is. Plus, if you subscribe, I'm here pretty much every day. Okay, stock market. Oh, I missed it. Oh, Denise. Thank you, Denise. Oh, my goodness. What's he doing? I see I got in my routine. Not paying attention to reality, huh? And now I'm not pulling properly? Interesting. Now my internet's slow? Really? Interesting. So 245, continuing 1,094,950. How about 2 million? Yeah. 245,000 in June. Building permits down again. Notice all these headlines came out a minute ago. Okay. Down 10%. Whoa. Wow. Huh? The housing starts down. Building permits. So this is like right now. United States housing starts change down to 9.8%.
United States building permits.
And this is in the
rose from
future.
Previous 4.7% to 2% in May.
But here's the number that's unusual for Wednesday.
United States initial jobless claims in line with forecasts, 245K in June 13th.
That's why it's nice to have the squawk, because I should just have it running in the background, but it's tough when you're doing the live stream. Huh? So the theory is, well, first of all, that's the 245. I think we had 246. So you shouldn't be surprised by that. In fact, I covered it 7 o'clock in the morning. So an hour and a half ago, we already covered it. Actually, I think I had it on 3 weeks, didn't I? 3 weeks. 245. Came out 240, or it could have come out as high as 246, but it came out 245, huh? So we got it right. Kind of cool, right? There it is, right there in writing. So, as expected, the market thought 246. Our number was 245, and we got it. So, anyway, so that's going to come out. Yeah, and that's much higher than before, of course. Yeah, you can see the elevation here. And in particular, maybe if you go out 3 years. Okay. Yeah, it's a pretty big number. 223 is the average over 3 years. And so, yeah, 245 is well above that number. Now, I kind of like the red line here is the revisionary number, the accurate number. It's kind of nice to have that. All right, so let's go back to the S&P 500. Sorry about that. I just got all excited. I got all tickly. So, what are your thoughts? Are you going to be a buyer today? You going to be a seller today? Are you neutral today? Well, let's take a look. Let's try to answer that using our technical radars. Okay. All right. Inverse head and shoulders out on the hourly, suggesting maybe it can try, I don't know. That looks kind of messy to me, huh? Yeah, that kind of looks messy. So I'm going to override that and say I'm not interested. What do we see? So what I teach you, again, in the description below the video here, you download flashcards that teach you how to use the SWOT analysis: strength, weakness, opportunity, and threat. Okay? So think of it as internal and external. There's an underlying intrinsic trend, and then there's the technical move, which is how people are trading it in the shorter run, right? How other people are trading it, or the next leg is what I always call it. So we can do like these three, for example. This is weakness, this is weakness, this is neutral. I would say up, but I'm overriding it. So this is my interpretation. Okay. Now, how do I get weakness, weakness, weakness? Well, it's a down channel, down channel. Okay. Now, the other side, the O and the T is, well, what's the next leg? The next leg is down. So it's weakness with an opportunity. Next leg is down. Okay, weakness with an opportunity. See, if the likely next leg was up, that would be a threat to bears. But think of it this way. On this time frame, the 15-minute chart, it's bearish. That's what the pattern is. This is just simply pattern recognition. It's not doing anything else besides technical analysis. Okay? On the 30 minutes, that's it. It's bearish, and that's that. That's a bearish pattern. Okay. Now, why is this showing up? Well, it believes it's a head and shoulders. Okay. And that if it is a head and shoulders, the next leg of the pattern is up. So maybe you're into that. Okay. Cool. And then the next pattern would probably be something like that. Okay. All right. So for those that are bullish, you got to go out to the hourly and play it that way. Okay. I'm not here to tell you whether you should be a bull or a bear. TRADARS doesn't tell you if you're a bull or a bear. This just tells you the patterns that are happening on the time frames. And by the way, if there's a time frame missing, it's because patterns don't exist. And I imagine since you like using charts, you believe in patterns. Even if it's simply a price action pattern, you're like, Wayne, that's not a pattern. Well, we consider that a channel. So it is a pattern. Okay, great. Now going out to the 4-hour. Once again, okay. SWOT analysis. Is this pattern a descending triangle? Does that show strength or weakness? Oh, this is where I want you to answer. Although I think I saw that there was like almost a 3-minute YouTube delay. That's not me, bro. That's YouTube. You should come to our live stuff inside of traders.com. We do hours of performance coaching every day, and there's zero lag. But let me answer my own question then. Descending triangle is weakness. Okay, and the leg is down, so that's an opportunity for bears. Whoa. Okay, let's go. Oil, oil, oil. Oi, oi, oi. My, oh my, WTI. Now, it's been up on geopolitical risk. Previously, it was down on contracting growth scares. Yeah. And so now it's different. Everything's different now. So we want to look at the 15-minute, the 30-minute, the 60-minute, the 240-minute, and the 1,440-minute chart. And we want to find either trending patterns or reversal patterns. Okay, so there's basically, you got to look at 5 different charts for 10 different patterns. So let's say a minimum of 50 things that you need to look for, and it takes me, boom, 5 seconds. Okay. Okay. Yeah, I don't really do that. Yeah, I'm not on LinkedIn to get followers. Yeah. I don't post anything on LinkedIn. Yeah. Follow me here at YouTube. So anyways, so we're thinking somewhere between 50 and 100 potential observations, and in 5 seconds I can tell you there's only 2. Okay. And there's a bullish channel on a 30-minute chart. That's strength with an opportunity. Riding, okay, you had an opportunity at the bottom of the channel, and now we're riding the moving average. Let me zoom in. Of course, you can do this yourself. You can do this yourself anytime you want. Anytime. Okay, there's opportunity 1, which is just simply buying at support. Oh my God, Wayne, really? Yeah, okay. The second one is now riding the moving average. Either way, this pattern is strength, and that is an opportunity. So, okay, it's nice to have the tools, right? Yeah, well, you back out a little further, and there's some contradictory stuff going on, but remember the way okay? I train you to overcome obstacles because a basic trader would say they're conflicting. Let me show you. Someone would say, well, this arrow says up, this arrow says down, and it's conflicting. No, it's not. Your confliction is from a lack of understanding, which is easy because we can fix that. Is this an uptrend or a downtrend? Okay, is this strength or weakness? Well, Wayne, there's a giant red arrow. Oh, I know. Is this strength or weakness? This is strength. That's an up channel, bro. Okay. Well, Wayne, why does it have a down arrow then? Well, it's showing you that technically it breached the slope, and that is a threat to bulls. And if it broke down, then bulls should be aware that bears could exit or enter here. It's not telling you what to do. Okay? So what happened? Did it break? No. These are emerging patterns. It's not that it's going to fall. It's that the potential of it is higher. And if it falls, then, okay, these are patterns that haven't emerged yet. It did not break, but it is an uptrend. The 30-minute was an up. Geopolitical points to up. So guess what? Somebody bought it at or near support. Okay? And it looks like it was price action based, which is just standard operating procedure. So now we're back above the moving average. Okay? So are you reading this correctly? Okay? This is an active live database. It's not a signal service. Okay? Now, if you need a signal service, you'll probably find one that costs you $50 or less, and they'll promise you to make you rich. If you believe that, that's what you deserve. I don't have to think, but this company over here will make me rich for $50 a month. Oh my God. Oh my God. Talk about preying on the sick and the weak, huh? So if you want a live database to make informed, intelligent decisions so that every trade and investment you make is based on logic and intelligence, then dude, TRADARS kicks ass. Technically, fundamentally. Yeah. You guys want to do some Bitcoin? Okay. Well, how about oh man, Azariah, you didn't have to delete that. Yeah. How about all of our crypto? Let's just take a look at all of the crypto that TRADARS has data for all reversal patterns on all time frames. So let's say 20 patterns on 5 charts on so how long does it take to do 700 charts? Okay? How long would it take you to look at 700 charts or 700 potential opportunities or threats? How long? 3, 2, 1. I'm done. Are you done? Yeah, I've been done a long time, actually. Okay, let's go. Potential reversal to the downside, Bitcoin 30 minutes. Solana, okay, bearish with a threat. Okay. Bearish, but a weird reversal pattern. I'd say even up and then maybe down. So I'd say not that one today. Okay, Ripple, check it out. That's bearish with a threat. Ethereum, 15-minute chart. That's bearish with an opportunity. Bitcoin, 15-minute chart, bearish with an opportunity. Ethereum, 30, bearish with an opportunity. Bitcoin, 30, bearish with an opportunity. Ethereum, 60-minute bearish with an opportunity. Ripple, yeah, bearish with maybe a breakout, but it's not quite an opportunity yet. Okay, you want it to breach, pull back, and then you do the roll reversal. Same price, less risk. Tastes great, less filling. Litecoin hourly, bearish with weakness with an opportunity. Bitcoin, weakness with an opportunity. Litecoin, 30-minute, bearish with an opportunity. ADA, okay, yeah, that's a weak pattern with a bearish leg, so that's an opportunity. Maybe it's not a good one because we're so close to the apex, but it is happening. hourly suggests exactly the same thing. Here's another look at the breach, slight pullback, maybe be able to sell off the extended now primary resistance line. You see? So maybe, just maybe, this pullback. Okay, and the next pullback. Nice. Did you see it? It's on the 30-minute chart. 4-hour chart, bearish with an opportunity on Litecoin. Okay, flag. It's a continuation pattern, bro. Continuation pattern. So it broke through, back to the moving average, down, back to the roll reversal, down, and what'll happen is that'll turn into a down channel, and this whole flag pattern will go away. Oh, you missed the flag pattern? You didn't see it on the 4-hour? Too bad for you. Okay, this came out 21 hours ago. So all you needed was a pullback to the moving average and drop it like it's hot. And then you can see as well, you know, nice little roll reversal. Okay, hey, you can't see everything unless you use proper tools. Okay, what does this say? Up, down, or sideways? That actually says down. Higher high predicting a lower low. That is an emerging pattern. This pattern didn't happen yet. Okay? So even if it makes a higher high, you should be prepared for this. But what has actually happened, it made a lower high and maybe is struggling. Okay, well then this butterfly didn't come to fruition, but down is down, son. This is a reversal pattern. Oh, snap. What? But wait, it made a higher high. Uh-huh. Well, you missed it. That's a reversal pattern. So if this was topish, you should be ready for it. And if you're a bull, don't be shocked if you run out of trend. And Bitcoin daily, you can see a pennant emerging. Okay. Yeah, it looks interesting, right? Yeah. So in many ways, I mean, this is leaning up on this pattern, but with this hanging around, these ones do kind of contradict each other. So you have to be a bull or a bear. Bulls are going to buy here. Okay, that's why we have two lines. Okay, you must know. Oops, you must know how to trade. Again, otherwise, even a signal service won't work for you because you don't know what you're doing. Okay, look, if you're a bull, you're going to buy on these lines until it stops working. So when does it become bearish? Well, if it did something like that, then this pattern goes away, and now you have a channel. Okay, but that hasn't happened yet. So the next leg of this pattern is up because we're assuming bulls are going to keep buying off of the primary support line. What if you're a bear? Guess what? Their bears exist here. Okay, where do bears sell? On their primary resistance line. Would they sell now? No, probably not. That's not what the pattern suggests. Now, a bear can sell wherever they dang well please. But if you're going to use the trend line, you know, at some point it's going to look like that. And then the pennant goes away and it becomes a down channel. So bulls buy low, bears sell high. Often this is a pennant because Bitcoin had such, bullishness behind it that one would assume if no fundamentals have changed, then you would probably continue to the upside. But we know the fundamentals are changing with geopolitical risk and seasonality, which could suggest, that no more up for now, which is the same as maybe down for now. Not up is the beginning of maybe down. Of course, takes me 5 seconds to see all this. And out of all of these patterns, there were 700 opportunities for me to look for, and it takes 5 seconds to pull them up, and it takes 1 minute to do the analysis. Yeah. Dude, you see how powerful this is? Gold, gold, gold. Who wants to do gold? What do you think on gold? Okay. Ali, go to investorbootcamp.com. It's $88 a year, and there's, I think, about 100 hours of training videos. Okay. Gold, 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 gold. Looking for trending patterns and reversal patterns only. Tell me about gold. Okay. Okay, bullish with an opportunity, bullish with an opportunity. Oh, neutral. That's it, done. Jim says he's bearish. Cool, this is very helpful. Don't be bearish yet. That's good information. So Jim might be looking at it this way. You're like, okay. Yeah. So what if it gets now below? Where's my, okay. What if it now, the top holds and the bottom breaks? Well, then that'd be better for Jim. And what happens is this turns into a double top and then a shorter time frame, like a 15-minute or 30-minute bearish channel. So here's the real hack. You want the life hack? Jim can sit on this page until this 15-minute or 30-minute turn bearish. Then it's go time for Jim, because on a daily chart, he's going to trade it like a double top. So now he has to wait for this to suddenly point down, because the trend looks like this. The up channels are gone. And now we have confirmed bearishness on lower time frames with a double top. He could be short for 3 months. Everybody else is an amateur. You can't trade like that. You're going to get run over like a freight train. Dude, I hope you see how powerful TRADARS is. Whoa. Whoa. Yeah. And you're like, well, do we have any fundamental data on it too? Yeah, if trading's closed tomorrow, how will it impact? I'm not trading tomorrow. Done. Gold. I have a weird Zoom going on. Okay. So there could be a little bit of bullish left in this, based on June, July, but then it collapses July, August. Oh, wait, Wayne, that's not fair. You're not allowed to go 6 weeks in advance. Sorry. Okay. Did you notice yesterday? Well, from between yesterday and today, we became more bullish on gold. We're more bullish on gold on Wednesday than we were on Tuesday. Shut the back door. Institutions are 80% long. Retail's 60% short. Well, no, that's total. I don't want total. I want retail. Where's my retail number? I guess it's not even here. But I believe retail is negative. Yeah. So that's actually just missing. So retail traders are short, right, Jim? Well, it doesn't mean they're wrong. It's just retail's short. Institutions want to buy those dips if it does dip. So this doesn't tell you that it won't dip. It just tells you that these traders are not likely to sell and maybe accumulate more. But ideally, bulls, long-term and short-term traders, and that's how I look at retail. It should just be short-term traders. Short-term traders and long-term traders disagree. Okay, so you could be short-term short, long-term long, all that kind of stuff. These guys might be long for years, and retail is trading price action, you know. But just imagine if it double tops. Yeah, why did I say down for 3 months? Man, I keep clicking the wrong button. Because I know that we've had some up, and we got some up, and then somewhere around now, meaning the next couple of weeks, gold very often tops out and drops for 6 weeks or 7 weeks or 8 weeks. So this double top suddenly has meaning. And if statistically this becomes bearish, best case, worst case, and base case is down, not up. And shorts increase and longs decrease on institution. So this goes 75-25, 70-30. We're on the short run. Gold can drop for 8 weeks. And you're like, oh, but that's right as rain. The problem is most retail traders don't know that. Okay? They don't know it. Now you know it. Do you feel comfortable trading without knowing stuff like this? I don't know why. Okay? I don't know why you'd feel comfortable not knowing this data that, you know, that you could be short for 8 weeks, not 8 days. Seems like you can make the same trade but be more profitable simply by letting your winners run. Your profitability doesn't require you to increase your leverage. No, your profitability is best when your risk is low by lowering your lot size and then letting your winners run. See, people that load the boat on their trades, it's because they need to make money, but their trades are not worth very much. Their trades are not worth very much. They're almost worthless. So to make any real money, you got to bet big. Well, what if your trades were worth a lot? Meaning you spent a lot of time doing analysis, technically, fundamentally, seasonally, sentiment-wise, everything's lined up, and you make a very intelligent trade. Well, it's just worth more. Therefore, it's likely to last longer. You're trading with the trend, and by definition, a trend is your friend. It lasts a while. That's why it's considered a trend. So why would you try for 25 pips when it might be worth 250 or 1,000? Okay. Well, I don't actually go on vacation, Sky Killer. I may be away, but I may be away, but I don't go on vacation. So anyways, yeah. I want you to make better informed decisions so that your trades are worth more. Hopefully you make more money with less risk. You see where I'm going? I want you to make more money with less risk. Yeah, there you go, Sky Killer. Yeah. Well, I won't be at my desk tomorrow. It's a holiday. Markets are closed. Cool. So now what? Well, the market's going to open in 20 minutes and you'll get some bouncy bounce and then everything's going to go cold turkey. And then tomorrow's a holiday. Today's Fed meeting is already predetermined. They're not going to cut interest rates. They're not going to raise interest rates. And with geopolitical risk, they're not going to be able to hint at anything. So be careful, y'all. Don't overtrade. If I were me, I'd be much more preparing for a U.S. strike on Iran than monetary policy. I think monetary policy right now is very well understood by the market, and it might be interesting but not informative. So Denise says, are we going to listen to Powell? I don't think so. That's the thing. That's what I'm getting to, Denise. Like, I think if anything, you're going to be suckered into something. I really think it's unreasonable for Powell to hint at a cut when the market is getting ready for war. If Trump bombs Iran, it's likely to be inflationary. Therefore, the Fed can't cut. That's it. Done. If they cut and then inflation gets hit, what are they going to do? Then raise interest rates? No. Right now, we're at 4.31, the Fed funds rate. And that's low, boys and girls. Kids, hey, if you don't have gray hair on your head, you think 4 1/3, 4 1/2, 4 1/4 is high. No, it's not. Those interest rates are low. 4 1/4 is not going to crash our economy. Okay? So there's no need to cut. Now, there's a need to cut if the economy is doing bad, but it's not doing bad, not yet. Okay? Or there's a need to cut if it's unnecessarily high. Okay? So I'm more prepared for I want to be prepared. I don't want to spend how about this? I don't want to spend my time today focused on something that is probably 95%. Well, actually, let me just show you. Okay. Let me just show you. Okay, 99.9% chance nothing's going to happen today. Should I focus hours of my time on something that's 99.9% likely to be benign? Or should I prepare for a potential, let's say 10% chance we have an attack on Iran in the next 24 hours? Well, 10% is better than 0.1. So I'm going to like cover my assets, right? So anyways, pay attention. You can watch it, all that kind of stuff. But I don't think it's the most important thing right now. Okay? Now you can go out a little bit. July is usually a dead month. The market doesn't think July is going to happen. Then you go to September, and there's a 60%, 63.3% chance the Fed cuts between now and September. And I'm not even certain about that one. I think we were going to get hints at this meeting. Okay? I think we were going to get hints that the Fed was going to cut in September. July, to me, is dead. Ain't going to happen. So I figured they were going to hint in June, the June meeting, hint again in July meeting. The market is well informed, and now they cut. Well, if they can't do that process of 2 meetings early for the hint, allowing the market participants to prepare, then if June is off the table, then I think September is much more likely to be off the table. Which just leaves October, December, and I lean on December. So anyways, So I think we drop from the 63, okay? And that brings dollar strength. Okay? And a week ago, it was 58. Now it's 55. So maybe it's already happening, huh? Maybe. So anyways, depends on your point of view. So make sure you have data. Make sure you make informed decisions. I'll give you a headline update, and then I'll let you go for the market open.
Oil steadies as Iran-Israel conflict enters 6th day.
Euro-US dollar price forecast holding ground as Fed looms.
Bank Indonesia holds interest rates steady at 5.5% as expected, hints at reduction. U.S. dollar INR steady near 2-month high. As markets brace for Fed decision, Iran-Israel conflict deepens.
The U.S. dollar Swiss franc trades above and below the 200-hour MA swing level. U.S. housing starts plunge much more than expected in May.
CPI softening boosts FTSE 100. U.S. weekly jobless claims edge down in line with estimates. U.S. initial jobless claims dropped to 245K last week. U.S. dollar drifts lower ahead of Fed decision as Middle East tensions persist.
Cool. And we're 4 hours and 45 minutes away from the Fed. Blah. The Fed blah. Now, the one last thing is you can download and read the summary of economic projections, but you don't have to do it today. Peace on earth. May the pips be with you. May your profits be above average. That just